Hey everyone, welcome to another episode of The Remote Real Estate Investor. I'm Michael Albom, and today with me, I'm joined by Mike Simmons, author, CEO, business coach, speaker. And we're going to be talking about Mike's business, wholesaling and flipping houses, and what we should be aware of if you're going to get into either of those businesses. So let's get into it. Mike Simmons, what's going on, man? Welcome to The Remote Real Estate Investor.
Thanks for having me. I appreciate it.
Oh my gosh, no, the pleasure is all mine. Super excited to have you on and really excited for our conversation today.
Yeah, me too.
So Mike, I know a little bit about your background. I know a little bit about what you do, but for all of our listeners who are not familiar with you, give us the quick and dirty, who you are, where you come from, and what is it that you do in real estate today?
Yeah, no problem. I always say that my background is probably the least remarkable. I didn't sell baseball cards. I didn't go around the neighborhood looking for lawns to mow or things to do. I was a normal kid, probably on the lazy side. My parents were in the automotive industry and were very blue collar in Michigan, right? So the life that was displayed before me through example and through explicit, direction from my parents, and the blueprint was you finish high school, you go to college, or just as maybe even more preferable, you get into a union factory type of an environment, and it's very secure, and you work there for 30 to 35 years, and you retire, and you hopefully save some money, and you scrimp by, and that's how life goes. That's just life. That's what people do. That's normal.
Yeah.
There wasn't one single person in my family or anybody on the horizon that was doing anything remotely entrepreneurial. So I did that. I went to school. I finished high school. I got a job with UPS, Teamsters. My parents could not have been happier with me being in the Teamsters. And I went down that path, and I got married young, and I was working at UPS. And unfortunately, UPS is a great company, but there are injuries that happen because people, lift wrong and all that. And at 24 years old, actually, I couldn't get out of bed in the morning without going to the chiropractor 3 times a week as a 24-year-old, otherwise healthy male.
Oh my gosh.
And I knew I couldn't retire from there because I was already almost too hurt and crippled to do the job I had to do at that time. And I was in my early 20s. And so I got another job in the automotive industry. It was a desk job. And I started working there. And we were in the mid to late 90s at this point. And the automotive industry, like most industries, was starting to decline, starting to have some problems. We were heading toward 2000, where a lot of bad things happen. And people think about tech and what happened to tech, the big boom that happened. But the same thing happened in the automotive industry, essentially. We went from, booming industry to many, many suppliers going out of business, struggling. It was really bad for a while. And so I had to look around and ask myself, and one thing I'm good about, one of my superpowers is I'm very honest, and I'm very objective about myself. And part of that is because
It can be a tough thing to do.
it's most people I don't think are objective about themselves.
Yeah.
And I'm not saying this to brag. I'm going to tell you why I'm objective, and it's going to kind of be like, poor guy. My dad was a Marine, and he made it real clear what our shortcomings were on a daily basis as kids. And so I have no problem being real honest in a way that say, this is what I'm not good at. This is what's not great about me. Like I'm very aware. I'm very easy for me to figure that stuff out. And so I asked myself at this point in the automotive industry, and things are declining. I didn't have a college education. Would I hire me if I were without a job and I was in the position of HR and I was, somebody like me was across the table? Is there anything about me that makes me more hireable than the thousands of people who've been laid off over the last few years? And it was easy. There was nothing about me that was remarkable. I had no college experience, and I had very little practical experience. So why hire me when there's so many really, really talented people that were being laid off because of the industry? So I went back to college, got a degree, and I was working, and I'm kind of fast forwarding a lot, but I got my degree and I doubled my income. Like the minute I graduated, I got a job which literally was twice the annual salary. And I was like, here we go, baby. There's no stopping me. And so just to kind of illustrate how that went. So I went into a company, it was automotive, and I was working there for about 6-7 years. And at one point, it's 7:00 at night. And it's everyone had gone except my team. Everyone had gone home for the night, obviously. It was 5 o'clock. Most people were gone. It was 7:30, and I'm in at work, and our client is there too, because there was something going wrong with our program that we were working on. And he's there, and we're discussing the problem. And the guy gets really agitated, the client. I'm not going to say which automotive company I'm talking about, but it rhymes with bored. Great company. I have an F-150, but he gets in my face and basically starts screaming at me, like dressing me down, like very much really like when I was a kid, like my dad did, right? Like he was just dressing me down. Yeah. And it was 7 o'clock at night. We're all working overtime. We're all clearly busting our butt to solve the problem. And he gets in my face, starts screaming at me. And he's the client, right? He's a big client. And I can't really say anything back except I'm really sorry. We're working on it. And after he walked away, I went to my manager, who was there too. And I said, what are we doing here? What is happening right now? Why are we here? I'm getting screamed at. We're doing our best. Like, there are issues. I get it. But nobody was negligent. We have things that have happened and we're working through. But why are we still here? We should be at home. And he said to me, I'll never forget, you need to get your priorities straight. And I thought, you are correct. I absolutely do. I have young children at home. I have a wife at home. I've been working overtime all week on this project. I didn't say this, but in my mind, I'm thinking, you are correct. My priorities are wrong. And from that point, I decided to take my side hustle that I was doing, which was real estate, flipping houses, not doing a particularly great job at it, but just kind of stumbling through it. And I said, that is going to become my career priority. My priorities need to get dialed back to my family and make sure I'm at home and I'm spending the evening with them and I'm eating dinner, putting my kids to bed. But from a career standpoint, that now becomes my focus and I will get my priorities straight. And so he essentially put me on the right track inadvertently. He obviously was referring to work priorities, right, but it worked the other way. And so I from that day, I started making my side hustle my main focus. And I will say, a year later, quit my job. And the first year that I was in business and real estate full time, listen to this. This is true. And I did this math. The first year that I was in business full time for myself as a real estate investor, my company's gross profits were equal to the total sum of my salary for the previous 25 years that I was working for somebody else. Year one, which was $1 million. I made over $1 million in my real estate. And over the years, like I'm talking going back to 18 when I started working, right? I was making very little money. And in the middle, I wasn't making a ton. Toward the end, I was making more. But if you just take the average, which is about $40,000 for me, and you times that by 25, that is $1 million. My company grossed that in 1 year.
That's
and
incredible,
I've never done that.
Mike. So where did you take it from there? I mean, are you still flipping houses today where you focus exclusively on that? Give us the insider scoop.
Yep. Yeah, good question. So I was flipping houses when I was working full time. My wife and I were flipping houses. And like I said, we weren't doing a particularly great job of it because she worked full time as a teacher. I was working full time plus as an automotive, person. And we were getting flips done, but we weren't particularly profitable like we should have been. We didn't have any processes in place. My wife is extremely risk averse. And so I kept trying to do more and do it faster. And she was slowing, like brakes, right? Because she was nervous that we were getting ahead of ourselves. And she probably saved me from really screwing up bad in the beginning. But at some point, she said, you know what? This is great. And you clearly love it. I don't love it as much as you do. In fact, this is making it hard for me to sleep. And it's making me hard for me to focus on my day job with the kids. And I'm a teacher and that's what I do. And I love you. I love real estate, but it's the roller coaster, the mental roller coaster is too much. And I really would rather you go on without me and let me pull back and I'll just cheer for you from the sidelines. And I totally support you. And this isn't a negative. This is actually a positive. I just trust you to do it better without me. And I did. And that's when things started taking off because I started doing way, way more activity. Like before we would get a house under contract, we would get it quoted out, we would renovate it, we would put it up for sale, we'd go through the wholesale process, closed, check in the bank before we started looking for the next one. And that's not really that's not how you scale anything, right? So when she backed out, I was like, okay. And I started putting offers in on multiple houses a day. Like I was putting offers on everything. And I started getting multiple deals at one time. And so I had to learn how to raise money and I had to learn how to manage screws. And what it forced me to do was it forced me to come up with a process and a system that was repeatable and could handle scale. Before that, nothing we did was scalable. It was all very manual. We'd go to Home Depot, we'd pick new colors for the walls, we'd pick out different cabinets, different flooring, like everything was custom to the house that we were working on. And what I realized was really, really good house flippers who do it at scale. Okay. And I'm not talking boutique flippers who go into a town and they buy a $3 million, historical home and they like put it back together with love. I'm not talking about that. I'm talking about the people that are flipping 20, 30, 80, 100, 200 deals. They are not falling in love with every single house and going in there and making it their own, right? It's turn and burn a little bit. And so I learned how to turn and burn a little bit more in my business and scale it in a way that had systems and processes. But I still hadn't hired anybody. It was still just me. What changed the game for me, and that changed the game for me in terms of, a racing analogy. But, and again, this is not, like I said all this in front of my wife as early as like the last month. I've said all of this and she 100% agrees. But she was like the governor in a race car, right? They put the restrictor on there so you can only go so fast. Once that got pulled off, I pushed the gas all the way down to the floor and I never stopped. And so things just go faster when you're doing that much volume. And back then, now we're talking about 2014-ish time frame. It was easier to get deals, I'll be honest. Like as someone who coaches people in real estate, I'm not going to lie. It's harder now than it was back in 2014. Still possible now, but it was easy back then. So I was getting deals off the MLS and it was going pretty fast. Fast forward another year or so, and it started to get harder to get deals off the MLS, and I was struggling a little bit. And so I had to do some research and figure out, and I was going to all the meetup groups, and I was asking all the other house flippers, like, where are you guys finding deals? Like, what's happening? Where are you guys getting your volume from? And they were all like, man, it's hard. Like, we're not getting deals. Like, we're struggling. And I'm like, well, where are you looking? Where are you trying to find deals? And everybody said the MLS, everybody. I only knew one wholesaler in my market. And I reached out to him. I'm like, dude, I know you're not buying off the MLS. So where are you finding deals? He's like, direct mail. I'm going direct to sellers. And I'm like, what is that? What do you mean go direct to sellers? How do you do that? And so I took him out to lunch. He gave me the down and dirty playbook for how to do direct mail, is what I was doing at the time. And I started doing that and the deal flow started happening again. And I started building. And what I realized was, and there's a whole story behind it that we don't necessarily have to get into, but I changed my model from house flipping to wholesaling. And it wasn't because of that guy. In a nutshell, I was overly dependent. And this is a huge mistake that new investors make all the time. I was overly dependent on one contractor and one realtor. They were everything. The realtors found all the deals for me and they ran the numbers and they told me what was a good deal. And my contractor was my only contractor and he basically made or broke my rehab. And on the same project, as chance would have it, the realtor missed the numbers pretty badly and my contractor started flaking. Now, if you flip houses or renovate houses or you have rentals and I say my contractor flaked, you probably don't need more information than that. You go, I'm with you. My contractor's flaked too, right? But essentially he stopped showing up. He started charging me for things that he wasn't doing. He started making up half-truths about stuff that he did do. And so I was forced, and by the way, I was getting deal flow because I was direct mail, right? I had to let both these individuals off my team, to say the least, and I had no backup plan. And so as these deals were coming in, I reached back out to my wholesaling friend. I'm like, what do I do? I don't know how to wholesale. Can you just tell me what that even means? Like, what do you guys do? And he, again, gave me the down and dirty playbook. And I called a house flipper friend of mine who I had recently talked to, and he's like, I can't find anything. And I said, hey man, I got this deal under contract. Do you want it for $110,000 at the time? That was the price, $110,000. He's like, let me look at it. Let me look at the numbers. He called me back in 10 minutes. He's like, I'll take it. I got it under contract for $95,000. I made $15,000 in like 10 minutes. And in Michigan at that time, a normal flip, 15 to 20,000 is a good flip number, profit number. And I was like, I made almost the entire profit with a phone call. That was cool.
And probably a lot easier.
So I sold it to him. so much easier, dude. By the way, no contractors,
Right,
no
right.
realtors. So I got another deal under contract. Ironically, it was also a contract for $95,000 and it was in a similar neighborhood. I called the exact same guy and I told him the exact same thing. I've got a deal for $110,000. It's yours. He said, give me 5 minutes. Calls me back. He said, I'll take it. This all happened within 4 weeks, 2 deals.
Wow.
I was like, I felt literally, you talk about love at first sight. I was in love with the model of wholesaling. And so I switched my model over to wholesaling and I started scaling it up. And what really changed everything for me though, because although I was scaling up and I was starting to have some success, I still wasn't really running it like a true business. I was a little bit scattered. I was a little bit unfocused. And I joined a mastermind, a friend of mine at the time who lived in California. He had a podcast and I knew him just through podcasting. And I was listening to his podcast one day. And at the end, he signed off, thanked his guest, signed off. And I was doing dishes actually at the time in my house. And I let it, it's just kept going because I wasn't able to turn it off. My hands were wet. And if it was over, he goes, hey, if you're still there, I want to let you know about this very exclusive opportunity. I am pulling together some of the best real estate investors from around the country. We're going to form a mastermind. We're going to share ideas. We're going to help each other. It's going to be awesome. If you want to get involved, send me an email, whatever. So I did. $25,000 mastermind. Well, $25,000 is a bazillion dollars to me at the time, but I was doing wholesale deals, right? And at the time, $25 was like 2 wholesale deals because I was averaging around $12,000, $13,000 per deal. And I thought, if I surround myself with these people, will I do 2 more deals as a result of the relationships and the knowledge that will be exchanged? It seemed reasonable that I would. And so I joined and I met someone there, a mentor, more than one person, but one person in particular, who laid out his company. He just laid it out. This is how I run my company. It's exactly what I do. This is what I did right and wrong over the last decade. And he had the company I wanted. And I said to him, his name's Andy, I said, if I see what you did and I see what you're telling me I should do, and I totally agree with you, but it took you 10 years. If I knew everything that you know now and I apply it proactively, couldn't I condense that time frame? Like, could I do it in a year? And he said, I don't see why not. That's exactly what I did. And I sort of came up with this term that I didn't think about it much until I've said it on podcasts and people resonate with it. But I think the most powerful thing you can do in business is to use other people who are successful, use their hindsight, which is 20/20, as they say, right, as your foresight. Yeah. And so I used Andy's hindsight, all the things he did right and wrong, as my foresight going forward. And I was able, that's what I was telling you that first year that I was doing it full time, because I applied all of Andy's principles. And I went from doing a couple of deals here and there to 10 to 15 deals per month and scaled up to $1 million in that first year.
That is amazing. And so right now your business is focused exclusively on wholesales, or are you still doing flips?
Historically, it's always been wholesales, but recently, and I have a business partner too, which is a whole story in itself, kind of interesting about hiring and identifying talent. But so my partner and I have started strategically buying properties outright and then doing in Michigan what we call them land contract, or we basically play the bank. We own the property and we sell it to them. And we hold the note as a company. So we started doing a lot of that. So we do like 100 deals a year, but half of those or more, but at least half would make fantastic land contract deals for us. And so, and because of, COVID kind of showed us this a little bit. And over the last several years that we've been in business, every business has ups and downs. Every industry has, markets go up and down, right? So revenue kind of fluctuates. And we thought, how do we level that out a little bit? How do we make the valleys much higher? So they don't go down. And so we're doing a lot of this land contract stuff because it's like, monthly recurring revenue. And so we make the valleys much shallower and the peaks are still there. So we're probably wholesaling half of our deals and the other half we're buying and land contracting out.
Okay, let's dig into land contracts a little bit, because it's just not something I know very much about. And we always joke on the podcast that we get to ask self-serving questions of our guests. So
I know, I do it all the time. I love it.
Walk our listeners through, asking for a friend, walk us through like how a land contract works and why it's so interesting.
Yeah, it's pretty straightforward, but the concept, and I'll kind of give you a peek, like a little bit behind the curtain here, right? The real like mechanics or the real like logic behind it. Me and my partner both, as of a year ago, I had about 25 rentals.
Okay.
Which I have sold recently. And I did it for a couple of reasons. Not because rentals aren't great. They're great. And actually the rents are higher now than even when I sold them. So rents are going up, which is awesome. But for me, I bought them I bought them in like 2015, most of them. And so the equity in them was very tempting to tap into. And I recently have started doing lending on a grander scale. Like I've scaled up my lending company, and I wanted to put that equity, that money into my lending company. It's just more my focus now. Mm-hmm. But so what we're doing with land contracts, and why one of the reasons why we love them is, unlike a rental, we are not responsible for any maintenance, any vacancies. Like we are what the bank is to your mortgage. Right. We get the mortgage payment regardless of whether or not they have a leaky roof or whatever has to happen, right? We don't have to deal with any of that stuff. And what we're able to do, at least in Michigan, this doesn't work necessarily everywhere the same way because the rents aren't high enough and the house prices aren't low enough for it to work in a lot of areas. But for us, if you take someone who's living in a neighborhood and they're renting, and let's just say they're paying, for the sake of round numbers, they're paying $1,000 in rent.
Okay.
And they're renting a certain level house in that neighborhood. I can buy a house in that neighborhood that maybe is a little bit in distress, that I can go in and buy it inexpensively and put some work into it. And if someone were to buy that house with a traditional mortgage, especially a year or two ago when rates were like high 2s, low 3s, they could buy that house and their mortgage payment might be $600. Right. But they can't get approved for a mortgage for whatever reason, right? They have bad credit or whatever it is, right? But I can buy that house, I can renovate it, and I can sell it to someone. And really the pitch to them is, listen, you want to own a home, and you're not currently in a position to get approved for a mortgage through a traditional mortgage company. But what if you could have home ownership and you would pay no more than you were paying when you were renting, right? Still going to be $1,000, give or take, but you own the home and you can build equity. And in 3 to 5 years, you can refinance out at a lower rate and you can own the home and probably drop your payments a little bit. Is it important enough to a person to own the home? If all things being equal, rent's $1,000, I have to pay this company $1,000 for the house, but I own the house. That's what we do. We buy the houses. Now, the reality is the interest rates are a lot higher than what you might get at a mortgage company, right? But we're also taking a bit of a risk. These are folks that have defaulted on things in the past, and their interest and their credit scores are not great, but they have home ownership at this point. And if they have a down payment and they want to own a home, we can get them into a home for no more than they would pay to rent a home in that neighborhood. And in 3 to 5 years, the goal for them is to fix things in their life and be able to refinance out at a lower rate and move on forever. And then, so we're typically, an average deal for us might be, we buy it for 50. The ARV is 100. We put 20 into it. So now we're into it for 70 and we sell it for 85. Right? We're still a little undervalued, so they're getting some instant equity. They have home ownership, but when they go to refi in 3-5 years, we're getting a $15,000 check or whatever it is at that point, right? So, and there's no calls from tenants, and there's no vacancies, and none of that stuff. So that's the allure for us.
Interesting. I mean, isn't that similar like rent to own, or is it different?
It's similar, but they're not renting, right? A rent to own, depending on how it's structured, obviously you can have some portion of the rent go toward whatever, but you still own the house, right? As you still own the house as the person who's having that rent own. We don't own the house necessarily. We own it for just the way the bank owns your house when you have a mortgage, right? But we're never getting calls from the city for tall grass. We're not getting calls about maintenance issues or whatever. We don't have to worry that they didn't, they left and they didn't finish their contract. Like, it's a mortgage, and if they don't pay their mortgage, then we will foreclose. We can foreclose on them.
Yep. Interesting. And so when you place these tenants into the home, there's a recorded sale that happens, and so you're literally just playing bank. Interesting.
Yep, just playing bank. Yeah, because we both had rentals, both of us, and like I said, rentals are awesome, but there's just a different level of responsibility for us playing the bank than playing landlord, and that's just what we're choosing to do. We both of us have had rentals, and it's awesome. Rentals have been fantastic for me. It's not what we're doing now, and we were just like gonna get rid of the rentals and just wholesale. That's it. But then this model presented itself. Somebody we mutually knew in the industry is kind of like, hey, I'm doing this, and they're doing it in Texas, and it works down there too. I don't know that it would work in Los Angeles or San Diego, or I don't know that it would. Probably not as well because of the house prices, but if you have house prices that you can get a house in a nice, and these are like safe blue collar neighborhoods. We're not talking about like war zones by any means. Right. I wouldn't buy a house there. But in a nice blue collar brick ranch neighborhood, if you can get a house between 50 and 150,000, it could work. When they start getting up to a $250,000, it just doesn't work as well anymore. You can't, the numbers don't work out.
Okay. Good to know. And just out of curiosity, I mean, how many folks end up refinancing out of your mortgage and then truly then own the house versus what percentage default? You have to go through that
it's a really good question. We started doing this like 8 months ago.
Okay.
I don't know. We've
don't
not
have a
been
life
through
cycle.
the loop.
Okay.
Yeah, but the friend of ours who kind of introduced this concept to us, he said about half of them refi out. Very few defaults, because it's home, people, it's their home, right? They don't default like they do necessarily on a lease because it's not as transient. So according to him, very few defaults. But we also screen people pretty well too, like you would with a rental. Like we're not just letting anybody in there, right? If they clearly have a pattern of defaulting on everything they've ever done, we could expect a default too. We're not special. But people have certain circumstances where their credit takes a pretty good hit, but it's something that is understandable or has a story behind it that makes sense. So I'm not expecting a lot of defaults. How many people will refi out? Our plan is to be a little bit more proactive with helping them with credit repair. Right now, we're not really getting involved in that, but I suspect as we do get more involved with helping with that the number of people who actually refi out will probably go up. So I don't really know right now how that's going to go down. We'll see. We'll see how that goes. I'm not sure. We'll see.
Okay. We'll have to have you back in 24 months to see what that looks like.
For sure.
Awesome. Well, Mike, let's shift gears here just for a moment and talk about wholesaling. Because I mean, like you were mentioning a bit ago, it's no surprise that deals are a bit tougher to come by today. I think in the industry as a whole, it's probably no surprise that wholesalers don't have the best reputation out there.
Yeah.
So, I mean, I'm going to share kind of my thoughts on, I think, what makes you different, but curious to get your thoughts and sharing with our listeners. I mean, what makes you different as a wholesaling company? And then what are some things that people can do to protect themselves from the not so great actors out there who are wholesalers?
Yep. The problem with wholesaling and the reason why it can get a bad name is it is advertised. And when I say advertised, I mean, if you go out on the internet and say, how do you become a wholesaler? Should I be a wholesaler? It's billed to people as this no money, no experience, and that's how you get started in the industry. And so
no risk.
Yeah, and no risk. Like you get this mentality of this person who thinks they're just going to roll out of bed, open up their eyes, and money's going to pour through the windows of their house if they're a wholesaler. and it's not true, obviously. So you asked me what I do that makes me different. Here's what anyone can do to make their business different, but it's not, just for wholesaling, but you have to run it like a business. And a lot of wholesalers are very transactional in their thinking. They only care about the check they're getting next. They don't care about future checks. They don't care about consistency or predictability of their business. And so they treat wholesaling like this little dirty act they have to do before the real serious business comes along. And the reason why a lot of wholesalers get this bad reputation also is because there's something called daisy chaining in real estate. And most wholesalers, I'm doing air quotes if you guys aren't watching, the reason most wholesalers or a lot of wholesalers have this reputation is they're not really wholesalers as much as they are what's called daisy chainers. And a daisy chainer is, okay, I'm a wholesaler. I market to sellers. I go into a seller's home. I create rapport and trust and understanding of what's happening. I get a purchase agreement with them, and I take that purchase agreement and I market it out to the other real estate investors in my community. And some person who sees this takes the pictures, they take the text, and they mark up the price, and then they send it out to a bunch of people, a lot of times, a lot of the same people, at a higher price. And it's like, call them. And so you call them and you say, hey, I'll take it, because you didn't see my marketing. You saw their marketing for whatever reason. And then you say, I'll take it. They don't even know me, and I don't know them, but they're representing that they have this deal under contract. And meanwhile, I'm working with my buyers, and I come to an agreement with a buyer. And then this person calls me who was also marketing out my contract and says, hey, I want to buy that house. And I go, well, I've already sold it. Well, he's already told his buyer that they can have it for that price, but I already sold it because I have it under contract. Now he has to go back to the buyer and say, sorry, we have to back out of this deal, right? And so it looks like a wholesaler is a really bad business person, bad guy, dishonest, whatever, misrepresenting himself, but he never had the deal. And so that happens, that runs rampant. That's a real epidemic in the wholesaling world. So you also asked me, how do you tell the difference, or how do you avoid the bad ones? Mm-hmm. The first question is because I get people who send me deals, and frankly, I'll look at them. If some other wholesaler finds a deal and they offer it out at a price that my company might be able to land contract that house and we want to buy it, we'll do it. So the first question I ask them is, do you have this under contract yourself, or are you representing somebody else? And a lot of times they do, and sometimes they don't, and sometimes they say they do. And I say, good. Then before I would buy this, I would need to see the agreement between you and the seller, your company and the seller. What's the name of your company? And I verify this stuff, because if they don't have it under contract, I don't even care if they say, yeah, it's not me, but the guy who has it under contract is a good friend of mine and he gave me exclusive rights. I want to talk to who has it under contract. Always deal with the person who has it under contract with the seller.
Yeah, right.
That's key. That's huge. And we don't allow daisy chaining. We don't ever allow people to market out our deals. We only market them out. And so all of our buyers know, we've told them several times, if we're marketing a house and you see the same house being marketed by someone else, believe me when I tell you they're not authorized to do that. They will never be able to sell it to you. So, and as a wholesaler, I always make sure that I'm dealing with the end buyer, not a middle person, right? So if someone comes to us though and says, hey, I've got a buyer and they'll pay you this much money and it makes sense for us, we'll give them a check. Like we'll compensate them for bringing that buyer, but it's going to be all transparent. We're going to let everyone know what's happening. And so transparency in the wholesale process is important between us as the wholesalers and the buyers. Total transparency. Now, I'll say something that your audience may not love. There is not total transparency between us and the seller. And does that mean that we're lying to them? No, it's not. It doesn't. But here's what I always tell people to illustrate my point. Nobody loves or trusts me more than my mother. Nobody. My mom has heard me explain what I do as a wholesaler 1,000 times, and she's been all ears. Like, she could not be more dialed in to her baby boy and what he does, and she's so proud and so happy, and she's listening intently. But if you called my mom and put her on the air right now and said, could you please explain to me what your son does, how he does it? She wouldn't know. She might even tell you I'm a realtor. She just doesn't know. It doesn't make sense to her. It's too obscure, right? So when we're in a seller's home, we don't say to them, Mr. and Mrs. Seller, I know you're under a lot of duress. You have to move. Maybe there was a death or divorce or whatever there was, right? Something happened and your life is spiraling. Here's the deal. I want to sign a contract saying that I'm going to buy your house, but I'm not buying it. I don't even know who's going to buy it. I don't know where the money's coming from. I don't know who's going to show up at closing. I'm not even sure if I'm going to be able to close. Can we sign the deal now? Nobody would say yes, okay? And that's a characterization of what a wholesaler does. But on some level, it's facetious, but it's sort of true, right? I'm signing a contract. I don't exactly know who's going to buy it. In my case, as a wholesaler, and what I think makes what I do ethical is I have the financial backing to buy any house that I put under contract. If worse comes to worse, I can buy it, right? And that doesn't come in the beginning. New investors don't always have that luxury. But what you can do as an investor, and where you can be transparent, and you should be transparent, is do not sign a contract and imply or explicitly state that you will for sure be closing on the house without exception. You can't say that in most cases. So what I say is some version of this. Mr. and Mrs. Seller, when I came here, I was prepared to offer you $100,000 for your house. That was the highest number that I was authorized to offer you. You cannot go below $110,000. That is your lowest. That's the number. That's the gap, right? You want 110 minimum, and I was maximum allowed to offer you 100. But here's what I would like to suggest. Let's sign the contract for 110. Okay. I am going to go back to my investors and people who make decisions and help me buy these houses, and I am going to see if there is interest at that price. I anticipate that there is not going to be, but there very well could be. But at the very least, if you can give me 2 weeks to talk to my investors and go to bat for you and try to make them understand. Now that I'm here, I see this house is very nice. I didn't know it was this nice, but it is a very nice house. I think I can get this done, but give me 2 weeks and I will come back to you in 2 weeks or less, by the way. And I'll tell you one of two things. Either we can't pay 110, and so we need to rip this contract up and just part as friends because we all knew that was a possibility, or we're going to move forward at this price and everything is good and I guarantee you we'll close. Okay. If you could just give me 2 weeks. Now, if you don't want to do that, I totally get it. If you go to a realtor, they're going to want you to sign like a 3-month contract where they get 3 months to market your house. I just want 2 weeks. And if it takes me 2 days, I'll come back in 2 days. Either way, I'll be totally honest with you, and it will be up to you what we do from that point. We rip up the contract or not. It's totally up to you. Is that something you can live with just for a week or two? And 9 times out of 10, they say yes. Now, when I go out now, I am going out to my buyers and I'm saying, hey, I got this opportunity. Who's interested, right? If I get crickets and it's like, nope, then usually we'll try to figure out what our buyers would pay, right? That's the next question. Okay, you don't want it, it's fine, but what would you pay for this? And we start getting that feedback. And so we can go back to the seller and say, listen, I was right. 100,000 is the best we can do, but I'm totally willing to rip up this contract because you want 110, or we can talk about a reduction. Or we get buyers that are like, yeah, I'll do it for that price. That's great, right? And it's a little better than we thought. And we go back and tell the seller, hey, if we go out to our buyers and we find out that 110 is a really good price for us still, we'll still make the money we thought we were going to make. We always go back and say, we'll honor the 110. Because I think that's the question I would be thinking in my mind if I'm listening to this interview. Well, what happens if they get really great offers? Do they still always go back and try to get that lower number? No, we don't. If we can make what we thought we would make or pretty close to it, we'll pay the higher price, right? My goal here is to get to heaven, not to make an extra $5,000, right? So I'm not trying to be a bad guy, but the key is the ethical wholesalers versus not. The ethical ones prepare the seller for the potential for a renegotiate or a cancellation up front. And so when we go back, how often are they irate because we come back and say, hey, we can't do the 110? Almost never, because we very thoroughly explain what we're doing and we prepare them that we may have to come back and discuss a reduction or a cancellation. People, honestly, they just want clarity. They just want to know what's going to happen. What people get mad about are surprises. So when you say, oh, great, 110, done deal. I can't wait to close with you in a few weeks. This is so exciting. And then you come back in 3 days and say, we have to cancel the contract. They're mad 100% of the time because you were not clear on what was happening. You surprised them with bad news. And nobody likes being surprised with bad news. But when you come back and say, hey, remember when we talked a week ago and I said this? Well, we can't do the 110. We tried. 9 times out of 10, they're totally fine. And honestly, 7 times out of 10, they say, well, what can you do? And then we have that discussion. So,
man,
it's all about setting expectations.
Yes. 1,000 times yes. It's funny, as you were going through kind of your pitch, I was like, oh yeah, like that makes sense. That's such a different like feeling that I got as you were giving that spiel than what I was expecting or than what I've experienced with wholesalers. So, I mean, kudos to you and your team. It's clearly working for you. So keep up the great work.
Well, honestly, we have gotten deals where, and I know this sounds cliche, but I swear to you, this happens all the time. And we only know that when people tell us, right? So my guess is it happens more than we even know. But We get deals where they got a higher offer from another wholesaler. But because we come in and we are professional and we do address their concerns, by the way, wholesaling is not really about buying houses. It's about solving problems. And again, sounds cliche, totally true. If you can figure out what their pain point is and you can focus on that, the sale of the house is secondary. And I know that because we've had sellers tell us, listen, we had somebody come along and offer us more than you guys, but we're not going to sell to them. We're going to sell to you because we believe you, we believe what you're saying, and we like working with you. So professionalism matters. And just to illustrate that point, underline it real quickly. One of our reps went into a house one time and he was talking to a seller and they were going through the whole thing. He was like halfway through the meeting and then knock on the door. And the seller says, oh, I forgot. There's another investor or another whatever they called him coming in, another person who wants to look at my house. And my rep was like, oh, okay. And he kind of stood aside and the guy came in. My rep looked outside and he saw the guy was driving a Mercedes. Nothing wrong with that. Mercedes is fine. But he left it running. He was wearing a suit. He came into the house, briefly said hello, and started walking around, pointing out all the flaws in the house. This is old. This has to be replaced. That's no good. Nobody wants that. And he shot a number at her of what he would pay and said, think about it. And he got in his car and left. Like everything that guy said that wasn't verbal screamed, you are not that important to me. I'm way too big of a deal for you. And I don't even have time to turn my car off. That's how little I think about what is your situation. I'm just telling you what I need and what I want and what I'll give you. And I'm out of here. Right.
Wow.
And understandably, the seller was floored. She's like, that was the rudest thing I've ever seen. Like, that was awful. I feel so like offended by that.
Yeah.
And of course, my rep was like, yeah, I would be offended too. That's pretty bad, right? Like, I agree with you. They're horrible. We're great. Let's get back to talking about how great we are. So it matters, like paying attention to their pain points and not being all about the number. If you start talking about price right off the bat, you can almost guarantee you're not going to buy the house.
Yeah.
If you start by listening and addressing their problems and let the sale be last, it'll work out for you much, much better.
I love it. I love it. Mike, we could go on, I think, probably for days talking about this stuff, but I want to be very respectful of your time and get you out of here. For anyone that wants to learn more about you, your processes, your business, where's the best place for them to do that?
Yeah, thank you for that, by the way. I appreciate it. The best place to get a hold of me would be on my website, MikeSimmons.com. If you just go to MikeSimmons.com, you can find anything about me, and also my podcast. I have a podcast called Just Start Real Estate. You can find the link to that on my website as well.
Right on.
Which you were on, right? You were a guest.
We had a lot of fun.
Check that out. Yeah, we did.
Well, Mike, thank you again for coming on and sharing so much wisdom with the listeners. Really appreciate it, and I'm sure we'll chat soon, man. I look forward to it.
Absolutely. Thank you for having me. It was a pleasure.
Likewise. Talk soon.
All right. Bye-bye.
All right, everyone, that was our show. A big thank you to Mike for coming on. Super, super insightful stuff. I learned a ton about the wholesaling business and wholesalers in general, and some really great questions that we as investors can be asking wholesalers to protect ourselves from the downside. So as always, if you like the episode, feel free to leave us a rating or a review wherever it is you get your episodes, and we look forward to seeing you in the next one. Happy investing.